Today I wanted to talk about HELOCs versus HELoans, home equity line of credit versus home equity loan. Now, most of you that are seeking financing and don't want to touch their first mortgage because of a great interest rate, you might be in the 2s and 3s from the COVID era, and you're looking for additional financing using the equity in your home, you think immediately HELOC. I hear, hey Sal, can I get a HELOC? You absolutely can. There is another option called a HELoan, and that's what I wanted to discuss is the difference. So a HELOC is kind of like having a credit card against your home. You can push and pull, you can use it, pay it back, use it, pay it back for a certain period of time called the draw period. Usually that's a 3-year period, sometimes it's a 5-year period, 7, and in some cases a 10-year period if you can find a lender to actually do that. I have a couple. But you have a certain amount of time to treat it like a credit card until it becomes the repayment period. And you have a certain amount of time, usually again, if it's a 3-year draw period, that leaves you with 27 years left to pay that loan back. So first I do want to talk about the HELOC itself, and then we're going to kind of move and pivot to the HELoan. But the HELOC is great if you don't need all your funds right away. You can get approved for, let's just say, $150,000. You could take maybe $100,000 at closing and, do what you need to do. You can pay it back. You can borrow more. You can take the full amount out. And then whatever your balance is at that 3-year period, okay? So let's just say you took out 100 and in 3 years, your balance is down to 50 grand. That your HELOC, your line of credit will end at that point. Okay, so at that point, you're going to basically be paying back the $50,000. So your payment, whatever your payment is at that time, it's going to be based on the $50,000 at whatever interest rate at that time. Usually, that first 3 years is an adjustable rate, and it could move up and down each month. And by the time that 3-year period hits, where that HELOC ends, you're going to be paying back on whatever balance you have at that time for that next 27 years. So if the interest rate happens to be really high at that point and you don't want to make those payments, a lot of my clients will often either refinance out of them, or they might even be selling the home at that point. They might have spent this time fixing up the home with the HELOC money, getting it ready to sell, for that second or third year. So again, the HELOC, there's usually a 3, 5, 7, or 10-year draw. Most of the HELOCs that I do are 3-year draws, because those yield the lowest interest rates.